But it always has.
Hi, my name is Phil. I'm with the California Fair Plan, and I just wanted to, as a heads up, just to explain that for this evening, for the folks that are coming, we've set up a special bank of an escalation unit, more or less, that's available. They're going to be available to help you. They're going to commit to help you if you have specific questions relating to your claim. So since it is, we do have a minute, I'm going to pass this around. It's a QR code. You just have an opportunity to go in here and put your information in, whatever questions, specific questions you might have, and then we promise you we'll get you, someone from our escalation team will call you back this afternoon or this evening after the meeting. And if we're not able to get to you by 7 this evening, they promise they'll call you within 24 hours. So we just wanted to make sure you got that special attention. And since we had a minute, I just wanted to pass this around, if that's okay, without distracting the meeting. Is that all right?
Sure.
Okay.
I'll,
We'll have it available.
well, maybe we can get started and then we'll introduce Julia before. So we're on now. Okay, well, welcome everybody. This is the town hall set to discuss insurance-related issues. I'm hoping we're also going to have another one of these that will include lawyers and public adjusters, because I think there are going to be some more drill-down type analysis that everyone will be benefited from having, that won't necessarily come from the Insurance Commissioner's Office or from the Department of Insurance or from Fair Plan. But this is who we have for today. So we're joined today by Rob Abadoza of the California Department of Insurance Outreach Analyst. He's responsible for Malibu and the Pacific Palisades. Shortly we'll be joined by Julia Juarez, also from the California Department of Insurance, Deputy Commissioner of Community Relations and Outreach. Oh, it says will not be present, but will be available on panel. Oh, will not present. Okay, my bad. Sergeant Tony Alvarado also from the Department of Insurance, Fraud Division. Laurie Kolb, also from the Department of Insurance Enforcement, Regional Supervising Investigator. Unfortunately, you may get to know these people more over the coming months. Hopefully not, but unfortunately you may, and that's no diss on the people themselves. And Phil Irwin, who is a public relations spokesperson for Fair Plan. And on the line but not present will be Amy Bach from United Policyholders. She's the executive director. Again, she'll be attending remotely, and that's also another person that I think you'll be getting to know or ought to get to know better because she's a font of information. So without further ado, I guess I'm going to turn this over to Rob to begin. Your choice. Where would you prefer?
Here. So, all right. Good afternoon, everyone. Thank you, Bruce. Thank you for the City of Malibu for having us today to talk about the California Department of Insurance and some of the efforts we've been partaking in the aftermath of the fires here in Southern California. But also, I think we had initially planned this for after the Franklin fire, and due to extenuating circumstances, we're here today to talk about pretty much anything that's insurance related to those fires as well. So I think we have a slideshow that's available. I'm not sure how I'm going to do this. Maybe it's probably better if I go up there then so I can take a look at. So, in the aftermath of these fires and pretty much and every wildfire that we've seen the role of insurance, whether it's with the rebuilding process, whether it's getting people on their way to additional living expenses, to help pay for rent, temporary housing, replace the things that they lost. And, we've also started to see, there's a lot of issues that a lot of people are dealing with when they're dealing with their insurance companies and the aftermath of a disaster. And, our focus right now is making sure that anyone affected by these fires is getting the insurance questions that they need answered, that they are getting their payments on time and as quickly as possible as well. So just a little big picture stuff. So we recently after these fires, we implemented a public wildfire claims tracker to show transparency in the claims process, to show the public how much in insurance claims that are being processed after these fires. And on this graphic here, you can see over 27,000 claims have been at least partially paid so far, equating to about $12.1 billion in claims to date. And this is as of early March when we've got these stats. Of course, we're going to be constantly updating this on our website. And on average, that's about $435,000 average per claim to go out to people to help pay for their living expenses, replace the things they've lost, and start the rebuilding process. And, pictured here is our insurance commissioner, Ricardo Lara, at one of our outreach events, the insurance workshops that we held. I believe this one was in Pasadena, but we held workshops in the Palisades. We held workshops in Santa Monica College, the Skirball Center, to help people get the insurance questions answered and to get people help with their insurance companies as quickly as possible. So if we go to the next slide. Oh, you want me to go? Oh, sure. So, after the fires in early January struck, the Department of Insurance and Insurance Commissioner Ricardo took several emergency actions to get immediate help for those that have been affected by these fires. The first thing, shortly after the governor declared a state of emergency for the area, Insurance Commissioner declared an insurance moratorium for residential policies within or adjacent to wildfire perimeters. So that's key because that insurance moratorium guarantees that anyone in those affected areas and in the zip codes adjacent to those areas would not have to be or would not be subject to non-renewal or cancellation by their insurance carrier for at least 1 year. Okay. And, this is also key because with the Franklin fire that happened a few months before that, the governor did not declare a state of emergency for that fire. So at that point, the insurance commissioner did not have the power to declare an insurance moratorium. But those areas that were affected by the Franklin fire are now covered under this new moratorium. So those who have been affected by that Franklin fire, they will also be given the benefit of not being canceled or non-renewed for at least a year. Now, we also sent out our disaster assistance response team because, you know, in the aftermath of these fires, we know that there's a lot of good people that are helping each other and, helping each other recover and replace the things that they lost. But we also know there's a lot of people out there who are looking to take advantage of the situation and looking to run scams, take a part of your insurance claims and so forth. So we send our enforcement team to wildfire affected areas to educate survivors about their rights, check contractor and vendor licenses, and ensure compliance with state regulation. And Sergeant Alvarado and Investigator Kolb will be talking about that later on. We also, as I mentioned, we also hosted several insurance workshops to help consumers understand their coverage, the claims process, and what questions to ask their insurers. Many people were able to speak to their insurers directly and get immediate help. And in some cases, after they would speak to us, they would walk over to their insurance companies, which several of those were in attendance, and walk away with checks in hand to start with the recovery and the rebuilding process. Phil and his Fair Plan team were there as well, helping as many consumers as possible. So we definitely want to send a thanks to all those insurance carriers who are there to get immediate assistance for those in need. Now, in the aftermath of those fires, and as time went on, we started noticing a lot of issues with the insurance companies and people who have been dealing with their insurance companies. And one of the first things was additional living expenses. So we were starting to hear stories of homeowners who were being who had to go back to their homes because their insurance company would not continue paying additional living expenses, even though the area had not even begun starting to clear the debris or anything just yet. There's a lot of toxic substances in the area, and a lot of people felt it wasn't safe for them to go back to their homes just yet. And shortly after that, the LA County Department of Public Health issued an advisory saying that any structure within 250 yards of any burn debris is still deemed uninhabitable in those areas. And we at the Department of Insurance followed up with that, saying that insurance companies need to continue paying those additional living expenses, especially for those in still standing structures where the area still just wasn't safe. Another big question that I've been seeing a lot in several of the meetings that I've attended after the Palisades with like Supervisor Horvath and the mayor's office is the contents coverage issue. So by law, for those that have suffered a total loss, contents coverage is insurance carriers are required to pay 30% of your contents coverage up to a maximum of $250,000 of your dwelling policy without an itemized list. And very early in the process, our insurance commissioners stated that, it just wasn't right for consumers who had just lost everything to go back and categorize and inventory everything that they had lost. So we encouraged insurers to continue paying above and beyond that minimum 30%. I believe we did that in early February, and by late February, we posted a list on our website of those insurance carriers who are paying more than the 50, 75, and sometimes even 100% of their contents coverage without requiring an itemized list. And one of the biggest things that I've been seeing in some of these meetings is some of the insurance carriers and people dealing with smoke damage. So again, a lot of the actions that we've taken have gone to help for those who have suffered a total loss, but those with still standing homes were coming back to a lot of ash, soot, smoke in the air, and no matter how much you clean, you're still going to get that smelling of smoke. And we've been seeing some pushback from some insurance companies on whether or not smoke damage is covered, whether or not they'll pay for cleaning and so forth. And again, we sent out a notice to all insurers that they must properly and promptly investigate all consumers' smoke damage claims and ensure fair payment under the law. So Now, all of those emergency actions, along with several others, they're all available, and the fastest way to get that information is through our consumer alerts on our California Department of Insurance website. So this here is a snapshot of our website, that little orange bar there in the middle. Consumers can click there and get up-to-date information on any big changes, any relevant information, new information that could be relevant to those after the wildfires, along with any regulatory changes and legislative changes as well. Right above that is the LA County wildfires claims tracker that I mentioned earlier, showing the increasing totals of claims and claims paid out in the process. I mentioned earlier about the insurance moratorium for at least 1 year. If you want to verify that your zip code is covered by that insurance moratorium, right there on the bottom left, you can click on that, look up your zip code. I believe most of Malibu is covered under that moratorium as well. And then right next to that where it says resources to help recent wildfire survivors, that's a pool of our resources, a collection of resources to help those who have suffered some sort of loss with these wildfires as well. So definitely encourage everyone to at least sign up for our consumer alerts to get up-to-date information on any changes in the future. Now, speaking of our consumer alerts, early on in the, soon after the debris removal program by LA County was announced, we also sent out a consumer alert advising homeowners how the LA County debris removal program works with your insurance carrier. We've got some flyers outside highlighting some of the facts about how insurance works with the debris removal program. In most cases, it results in no out-of-pocket costs to the homeowner. If you have additional debris removal that is not covered by the Army Corps of Engineers, you can use your debris removal funds to clear that first, and then the LA County will bill whatever remaining is left over of your debris removal coverage. So, as many of you may be aware, the deadline was March 31st, but that just got extended to April 15, 2025. So there's still a few hundred parcels out there who have not either opted in or opted out. And, as you've probably been aware, the Army Corps of Engineers has been doing a fantastic job clearing up the debris, moving well ahead of schedule. Let's make sure that anyone who hasn't already signed up for that or opts out is able to do so. So, as the debris removal continues and as debris is cleared, there's going to be a strong focus on rebuilding within those affected areas. And wildfire mitigation has to be a priority when rebuilding and keeping that in mind. And especially when it comes to insurability, the biggest issue that a lot of insurance carriers have been looking at in, not covering certain homes in high-risk areas is with the wildfire risk. And a couple years ago, we at the Department of Insurance released what are called the Safer from Wildfires regulations, which is a 10-step process which includes certain things that and improvements that you can do to your home to make sure that your wildfire mitigation is up to speed, to make sure that you are protecting against some of the most common things like embers and having the proper defensible space. Plus, when we introduced those Safer from Wildfires regulations, we also implemented first in the nation insurance discounts for having certain things like the proper roof, having enclosed eaves, having the proper windows and so forth. So if you have some of these things already done on your home, make sure to talk to your insurance carrier to see what type of discounts are available, because the more that you do, the more discount would be applied to your home insurance policy. This also developed or introduced transparency in the wildfire risk score process, where homeowners can ask their insurer for their wildfire risk score, which is a score that each insurance company assigns to your home, kind of like a credit rating or a credit score, where they assess the insurability of your property based on its wildfire risk. And you can request that from your insurance carriers thanks to this Safer from Wildfires regulation. So when people are thinking of building back or making improvements to their home, keep these Safer from Wildfires regulations in mind. And a lot of these things you may already have done to your home, things like having the proper roof, having the 5-foot ember resistant zone, including fencing, which is that defensible space around your home, non-combustible 6 inches at the bottom of the exterior walls, ember and fire resistant vents, double pane windows or added shutters, and having enclosed eaves. Also, once you've protected your immediate structure, you expand out to your immediate surroundings. This includes clearing vegetation, weeds, and debris from under your decks. moving combustible sheds and other outbuildings to at least 30 feet away, and trimming trees and removing brush in compliance with state and local defensible space laws. And that's important because you can request an inspection from your local fire department, from CAL FIRE, have them come and take a look at your homes and see what type of improvements you can make to help minimize that risk on your home. Same thing with protecting your whole community. So there are two programs called the FireWise USA and Fire Risk Reduction Communities, which are nationally recognized programs to help communities reduce wildfire risk in their neighborhoods. And communities can start these FireWise USA neighborhoods with as little as 8 dwelling units and can be as big as 2,500. And again, simply being part of a FireWise USA community can offer significant discounts to your homeowner policy. Plus, this can also, when you are part of a FireWise USA community or fire risk reduction community, you may have access to certain grants or funding that can help with your community towards wildfire mitigation. So as the community starts to rebuild and with wildfire mitigation in mind, just want to come up with, just show you an example of a wildfire resilient neighborhood. So a few days ago, KB Home, one of the biggest home builders in the state of California, announced the nation's first wildfire resilient neighborhood in the country. And you can see with this home, I think it's like a neighborhood of about 60 plus homes or so. And you can see in this graphic here, they've highlighted certain areas. You can see that 5-foot defensible space around their structure. They've highlighted the roof. They've highlighted the vegetation around there as well. And you know, this is the first neighborhood to meet the wildfire standards set by the IBHS, the Insurance Institute for Business and Home Safety. Now, lately, you know, in the aftermath of the fires, we at the Department of Insurance have been getting a lot of requests from several neighborhoods across the state to talk about wildfire mitigation and wildfire safety. And, you know, a lot of that has to do with clearing vegetation, debris, 5-foot defensible space, and so forth. But you know, with an example like this of wildfire resilient neighborhoods, and especially as areas like Malibu, the Palisades, Altadena begin to rebuild, all those neighborhoods across the country are going to be looking at this area to see what takeaways in rebuilding there are going to be, what wildfire mitigation techniques and environmental techniques they're going to be using for those neighborhoods, and using that to set as an example for other neighborhoods across the country when it comes to wildfire mitigation. So definitely, as if any of you have or for anyone that has their homes affected by those fires or suffered damage, keep wildfire mitigation in mind and make sure that you're taking some of these factors into account. Now, one of the biggest concerns, of course, is once the rebuilding process is done, what is the insurance market going to look like at that point? What are going to be my insurance options? Right now, like we said, there's that insurance moratorium. For those of you who have suffered a total loss, you're automatically granted 2 renewals by your insurance company as well. But once the rebuilding process is done and your insurance company decides to move on, then what is the insurance market going to look like at that point? And in the past few years, this is what the Department of Insurance has been working on, called the Sustainable Insurance Strategy, to modernize their insurance market, to get these insurance companies writing back in high-risk areas again, and create accessibility for and options for those homeowners who need insurance for their home. We're also looking to create a resilient insurance market to make sure we don't slip back into the current market that we're at and keep those options available. We also are intending with this sustainable insurance strategy to protect communities from climate change. And these are all part of the biggest insurance reforms in over 30 years since Prop 103 was first introduced. And some of those regulatory reforms that we've introduced are, first of all, improving the department's rate application approval process. So in the past, so basically, the Department of Insurance under Prop 103 has first approval of when an insurance company applies for an insurance rate. And in the past, that could sometimes take up to 12 months, 18 months, or even longer. And by the time those rates are approved, that insurance company is already working with outdated data, and they've got to reassess and reevaluate and possibly apply for an application again. And since then, we've hired a lot more actuaries in our department. I know Julia, when she's done presentations in the past, she's literally asking the crowd, if you're an actuary, please call us and we'll hire you. We're definitely looking to fill that, and we're looking to speed up the rate application process to make sure that data is up to date. We've also introduced new climate risk management tools in rate making. Now, this is one of the biggest factors, again, for insurance companies that stopped writing in certain areas, is they weren't, excuse me, they weren't able to accurately assess risk and their future losses in those areas, especially in the state of California. And one of the reasons was because we only allow them to use historical models for their future loss projections, where basically they're taking the last 20 years of data, projecting that to happen again and again in the future, where, you know, as many of you know, in the past 20 years, California has suffered some of its largest wildfires in its state history, and they're just going to keep projecting that again and again. But we finalized these regulations in December 2024 to allow insurance companies to use what are called catastrophe models, which are data-driven, simulation-based, forward-looking models to take into account the wildfire mitigation that homeowners have been taking, all the mitigation that's been taking place in the cities and the counties and across the state, where a fire hydrant is located in proximity to your home, where the fire breaks are, and use that to evaluate and properly assess risk. And right now, there's a few companies who are going through an evaluation with those models, and once those are approved, the insurance companies will begin using that and hopefully opening up more options in the insurance market. And also, you know, we have noticed that there's a lot more people going to the FAIR plan over the past few years. Market share in the past few years has gone up from 2% to 4%, possibly even larger, as some of those home insurance options have dried up. And, you know, although the goal of the sustainable insurance strategy and the Department of Insurance in general is to get everyone back into the open insurance market, we still want the FAIR plan to continue to be a viable option for those properties who may not be able to get covered with other insurance policies. So we want to ensure that it remains financially solvent and sustainable while providing more yet temporary comprehensive commercial coverage. As a matter of fact, last Friday, the commissioner approved increasing the commercial policy limits for the FAIR plan up to $20 million per structure and $100 million in total per per property? For the entire HOA, commercial property, and so forth. So hopefully that could provide another option for HOAs, senior living facilities, commercial properties to be able to get that wildfire insurance. We've also enacted intervenor reform. So part of the Prop 103 process is when insurance carriers ask for a price or a rate increase of over 7%. That is open up to, that can be opened up to a public hearing. And to ensure transparency and accountability in that process, we want to make sure that those intervenor processes are complete and don't deviate too much, or aren't at least similar to what the Department of Insurance is doing, meaning there's actually a variation in what the Department of Insurance finds, just so that, you know, we can streamline the process, and we're going to continue pursuing additional rulemaking in this year. But with these changes and reforms and these new regulations that were passed in December 2024, we also required first in the nation insurer commitments to write more policies in wildfire distressed areas. Like I said, some of these tools, especially with catastrophe modeling, these are things that have been done across the state or across the country, actually, which were not being done in California. And insurance companies, in order for them to start using these new modern tools, they have to commit to writing at least 85% of the homes and businesses in wildfire distressed areas to help reduce the FAIR plan population and hopefully increase insurance availability for consumers. Now, in the aftermath of the fires, the state legislators across the state have begun taking action and drafted new legislation, new proposed legislation to help homeowners, to help communities mitigate against wildfires and also provide certain benefits for those who are attacking wildfire mitigation on their properties. And I want to highlight some of these. There's a package of like 10 bills or so, but I'm not going to go through all of them. First is the California Safe Homes Act, Assembly Bill 888, by Assemblymember Lisa Calderon. This establishes a grant program within the Department of Insurance to support qualifying residents in obtaining new or replacement fire-safe roofs and other fire-safe actions within 5 feet of the structure, covering part or all of the costs. There's a similar program out there for insurance or for earthquake retrofit called the Brace and Bolt program, where homeowners can apply for retrofitting funds towards their home. And this would act similar. Residents and homeowners can apply with the Department of Insurance and hopefully receive grants, tax-free grants directly towards wildfire mitigation. One of the biggest questions that topics that I've seen in a lot of the town halls that I've been attending is insurance companies requiring homeowners to submit an itemized list of all their funds or of all the things that they've lost in order to collect on their contents cover 100% of their contents coverage. But with the Eliminate the List Act, Senate Bill 495 by Senator Ben Allen, this would require insurance companies to pay wildfire survivors 100% of their contents coverage without needing a detailed list. The California Community Fire Hardening Commission Act, Senate Bill 616, as I mentioned earlier about making sure you've got an inspection with your home or with CAL FIRE and your local fire department to make sure your home is wildfire safe. This would unify some of the standards for inspection across the state to make sure that cities, counties, and the state in general and all communities are following the same guidelines. California Public Wildfire Model Act, which would produce the nation's first public California-only catastrophe model based for wildfires. The only other state that implements a public model is Florida for hurricanes. And the idea with this is because I mentioned earlier that we allowed insurance companies to start using catastrophe models, but those are proprietary models where the public doesn't really have any insight or understanding of how that data is being used. This would open up transparency to see exactly what they're basing your insurance rates on with this catastrophe modeling. And again, this is a list of all the different legislative bills that the Department of Insurance supports. I'm not going to go through all of them, but one of them includes increasing or expanding that insurance moratorium to commercial properties, strengthening the FAIR plan, limiting or capping the amount that public adjusters can charge. So definitely keep an eye on those bills in the future if that's something you would like to support. How are we on time? That's it? Okay. So we've got some questions. I'll answer those later on, but let's move on to the next session. Next presenter. Thank you.
Thanks. And before we begin, I actually had some introductory remarks I missed here. To let you know that after the presentations, there will be a Q&A. It was scheduled to start at 5. We're running about 10 minutes late, so it'll start a little after 5. And what we'll do is we'll use these 2 microphones. You step up to the microphone, we'll go back and forth, and you can ask questions. Zoom participants are encouraged to submit their questions via the chat box. For in-person participants, just step up to the microphone. To ensure everyone, both in the room and joining via Zoom or YouTube, can hear you clearly, please speak directly and audibly into the microphone. We may not have enough time, unfortunately, to accommodate everyone's questions, and I'm just going to ask perhaps if we could accommodate first anyone who lost their home in the fire, make sure their questions get answered. And not that anyone else's question is less important, but they're the ones I think that are hurting the most and that need this information the most right now. So sorry for the delay. Without further ado, our next speakers are from the Fraud Prevention and Investigation units. And would you like to sit there or we want to come up here? It's up to you. Okay, just turn your microphones on.
So Sergeant Alvarado and I work for the Department of Insurance. We're in the enforcement branch, and I'll let him tell you kind of what they do a little bit, but they deal with insurance fraud committed against an insurance company. On our side, investigations, it's agents, insurance companies. You are the victim in those cases. For the wildfires and the stuff that we see, we end up getting complaints for public adjusters who, if you are not familiar with what a public adjuster is, they are an adjuster that you hire to be your spokesperson between you and the insurance company. They charge a fee for that, and you have to sign a contract. There are some rules and regulations that they have to follow, such as if you're in a disaster area, they cannot enter that area or try to get you to sign a contract until 7 days after the disaster's been released. So sometimes that's sooner than later. If they decide the disaster's over in 1 week, then they have to wait 7 days from 1 week. If the disaster area is 24 hours, which we had a fire in Kern County that burned through so fast that the fire was gone within 24 hours, so they were able to lift that. So every occasion is different. They can charge you whatever they want. There's no limit. I see one of the things that they listed up there is they're going to try to put a limit on what they can charge, but you as a consumer can negotiate that with them. I have found that most public adjusters charge between 10 and 30%. You can shop around for public adjusters. Once you start a contract, you have 3 days to cancel. If you thought about it and decide you don't want to use a public adjuster, you can cancel that contract within those days. Unfortunately, we don't really see a lot of the results of this we're guessing about 1.5 years into it, because you don't realize there's a problem with the public adjuster until things start moving forward in the construction and the negotiations with the insurance company. We have received a couple of complaints so far through these fires, and they've all turned out to be not anything that was a true violation. So that's good news in that respect. But if you have hired a public adjuster or are planning on hiring a public adjuster, there are rules and regulations that they have to follow. You can find that also on our website. There's a whole section for them. You want to make sure that they are actually licensed. During a disaster area, a public adjuster from California that has a business here can hire someone out of state to come in and help. And insurance companies do this as well for the adjusters that come to look at the homes, because with the losses being so large, they may not have an employee pool big enough to address everybody's issues quickly. So they will bring people in from out of state. And the public adjuster is very much the same, but the difference is a public adjuster from out of state has to work under a public adjuster who's licensed in California. So again, all of these things are listed on our website. You can call and talk to anybody with the Department of Insurance. There's a 1-800 number if you have concerns or complaints. We're here to help you and try to make sure that you're being treated fairly and that they're following the laws.
Thank you. Again, like she mentioned, my name is Tony Alvarado. I'm one of the sergeants out of the Valencia Regional Office, and I'm part of the fraud unit that we investigate allegations of insurance fraud. After the fires, we were out conducting outreach to the fire-affected areas. We wanted to let the community know that there's contractors out there that might not be licensed. They might not have all the required licenses, such as workers' comp insurance. So we want to make sure that everyone out there is being diligent and kind of verifying that if you're going to hire a contractor, make sure that they're licensed. A good agency to reach out to, that would be the Contractor State Licensing Board. We work with them pretty closely during these fires because we want to get that information out there. We just don't want these victims of the fires to be hit twice now with a contractor who's going to do substandard work that you'll probably have to pay more money later on to bring it up to code, or they take your money and they don't do the job. So we want to make sure that this information is out there. In addition to that role, we're also investigating allegations of insurance fraud. People that are committing fraud, they see this as an opportunity. Already we've received so many referrals of individuals that are trying to commit insurance fraud by claiming that they were victims of the fires when they weren't affected at all. So these are cases that we really want to move swiftly on, and the DA has promised to work in prosecuting these people that are committing these types of fraud, because obviously the less funding that the insurance companies have for legitimate claims, it's being wasted on people that are trying to commit fraud and trying to get benefits that are not entitled to receive. So we will both be available afterwards for any questions regarding either issues with the insurance company or with allegations of insurance fraud.
Thank you. And our next speaker is going to be Amy Bach online. And I think she's going to be talking about the other concern, which is I'm not going to call it fraud, but the problems that are coming from the insurance company, not from the people that are trying to take advantage of the insurance company, but the other way around.
Yeah, hi. I don't know if you guys can see me. Can people see me on the screen or no?
Not at this moment.
Okay. All right. Well, that's okay.
Do we have a way to do that?
Just imagine, well, it's okay. Not a problem. You can just imagine, your basic dark-haired former New Yorker type person, not very tall. but very much rooting for your community, those of you who were impacted by the fires, very much rooting for you. And then for all of you who may be here because you got dropped, non-renewed, you've been scrambling to keep your property insured, you've gotten a lot of information already that I hope will be helpful to you. I want to say thank you to the Department of Insurance for weaving me in today on the forum, and also let all of you know, if you have not heard of United Policyholders, to tell you a little bit about us. We do have a slide deck, Rob, or are we able to see that slide deck? Is that possible?
Yeah, we can see it.
That will help me give some context here. Okay, so we are a 501c3. That means we're a nonprofit. That means that that we are here for you. You can't hire us or pay us. We exist to be an information resource and a voice for you, people who buy insurance, and have a reasonable expectation that that insurance is going to be there for you if you have something bad happen and you need to use it. We run 3 programs: Roadmap to Recovery, Roadmap to Preparedness, and then our advocacy work. You will see I answered one of the questions that was in the chat because it was an easy one relating to this question about whether insurers have to whether the commissioner has the authority to make insurers waive that onerous requirement that you itemize everything that you lost, which is one of the huge pain points among many for people who get impacted by a wildfire. So next slide, please. So what you can get through our organization, you can go to our website, and we have a library curated for the LA wildfires, also the mountain wildfire from last year. And we've got in the library, we have been, for 34 years, we've been providing recovery support to people who've lost their homes or had their homes damaged in a wildfire and need the straight scoop and need to know what's up, what's down from, and then the Department of Insurance is also an impartial resource, right? They are also here for you. They're a government agency, a little different. We're a little bit more touchy-feely. We have a lot of people on our staff and in our volunteer network that been there, done that, went through a wildfire and got help from our organization, and now pay forward that help by volunteering with us. So if you met one of our people at one of the 2 DRCs, you will know a little bit about us. At our website, we have samples of letters, documents, claim forms, to help you be your best advocate, your own advocate, to get what you're entitled to. Now, I did hear the councilman mention earlier about public adjusters and lawyers. Well, I happen to be a lawyer. I'm not a practicing. Sometimes I sign some of the friend of the court briefs we file, such as the one we recently filed on smoke damage, because there's a pending legal matter that affects all of you who have open smoke damage claims, and we are trying to influence the outcome of that legal matter in your favor to confirm what we believe, which is that your insurance company has an obligation to pay for your home to be properly tested, assessed, remediated, cleaned, restored, and tested again. So some of the things you'll find on our website are, we drill down on issues like smoke damage, et cetera. So you will see the workshops that we are hosting. We're on our, I think, 7th webinar for the LA fires, as well as the survivor to survivor workshops that you can register for if you have gone through a loss. These are very much for people who want to talk to other people who are in their situation and trade ideas. Okay. And about public adjusters and lawyers, on our website, you will find a Find Help directory. And in that directory, that's the last link on this page, you will find a relatively limited number of law firms and public adjusting companies that support our organization. And I'm not here to say that every one of them is going to be, be your savior. But I will tell you that the names that you will see on our website are people who do this day in and day out. They are, you will find California-based public adjusters. You will find California-based insurers, lawyers that all they do is read policies and counsel and represent people on insurance matters. Those are the kind of professionals we really recommend because I think I've never seen anything like what's happened in the aftermath of the tragic fires in January in terms of the noise and the number of events and a lot of them are hosted by private law firms wanting you to hire them. A lot of them are hosted by builders who want you to hire them. That's fine, but I just want you to know that two of the sources of really neutral information that are not trying to sell you anything are the California Department of Insurance and United Policyholders. Next slide, please. Okay, so we know what your challenges are. We're talking about a lot of them today. Rob hit on a number of them. A lot of you, if you haven't signed up for the coordinated debris removal, we really recommend that you do for a lot of reasons. For one thing, there's going to be a lot of traffic. The fewer trucks out on the highways, the better, and the more coordinated and the safer and faster the debris will get removed if it is the Army Corps of Engineers and not 100 different small outfits doing their own thing. The claim process in general, the reason that our organization exists and why we offer so many kind of bite-sized tips on how do you do this and how do you figure out that, and is because the claim process in general is a lot more complicated than it should be, but we live in the here and now with what is, and the tools that we offer are really designed to be realistic to what really is happening out there. So you are going to have rotating adjusters. That's always going to happen after a big disaster like this. The key is to have continuity. So if you get more than 3 in a 6-month period, the law requires that your insurer give you a status report on where things stand. So you're not going back to square one every time a new person comes on. Communication problems. We have lots of tips on how do you be how do you be that squeaky wheel that gets paid. We've got lots of information about the FAIR plan. You have somebody really valuable with you tonight, Phil Irwin, very, very rare bird, somebody who is an insurance agent, so he knows all about the products, but he has been helping out the FAIR plan. They've been very under resourced. They were not quite ready for what's been coming their way the last 4 years. So really grateful that Phil is here with his support, and that the department has been very honest in recognizing that the FAIR plan has some work to do to meet its customers' expectations, and that is a work in progress. We talked a little bit about the pain of having to itemize, but that remains, doing the itemized inventory remains really the only way for most people to get a full payout, right? You can, thanks to the law, and somebody needs to keep me on time here so that I don't go over, because I know you were already a little over. Do you want me to wrap up in about 3 minutes? Is that kind of where we want to be?
Amy, I actually have a bias in favor of what you're providing, because I actually think that as important as the Department of Insurance is, you are here as the #1 consumer protector of everyone we have speaking, and I'm going to want other forums for that, but I think what you're providing is extremely valuable, and we all know it's just the tip of the iceberg.
Well, thank you. I just want to say, we don't have rulemaking authority. That's the DOI's, that's where they are, right? They can issue fines. They can issue orders to show cause. They have a really big team. And I think, they have been really showing up after these fires. I mean, with workshops and public-facing events and late nights, answering a lot of questions. So I appreciate the respect for us, but we are just we are a nonprofit. We're an educational advocate, but we will give you the straight scoop. That's what we do. So again, all these issues that a lot of you may be grappling with, like, why is it like this? In a lot of those cases, it shouldn't be that way, but that is how it is. So we offer some tools. So for example, on the itemized inventory, we give you 3 different samples of spreadsheets you can use. One of them actually has links to pricing services. Because at the end of the day, while it's great that the legislature, with the department's support, passed the law that says that your insurer has to give you 30% of your dwelling benefits towards replacing your contents without an inventory, there is that cap of $250,000, and if you've had a total loss, chances are you're going to need more than that $250,000. And so for a lot of you, I want you to go on our website. You can watch one of our webinars on getting your contents claim paid fairly. You can look at those spreadsheets we offer to help you shortcut. And we just don't like to see you leave money on the table, unless you're close. If 250,000 is kind of close, we don't judge. If you just can't deal, with like trying to get that extra 10K, you don't have to feel bad about that. But again, we want you to know that there are tools to help you meet that requirement while the legislature decides. I put the bill number in there. You heard Rob mention it. Do they want to make insurance companies pay you your max without the list? But even if that law were to pass this session, chances are it's not going to be retroactive anyway. So, in real life, where we all are now, we're here to help you. Now, we also have sample letters that you can customize, asking your insurer to waive that requirement that you itemize, and you tell them the reasons why. If you have any kind of infirmity or illness or special challenges that makes it really hard, harder than it is for everybody. It's hard for everybody. And then you can cite to the commissioner's bulletin asking them to waive, and the fact that some insurers are waiving that and they have waived it. But again, because of the situation in the marketplace today and the financial pressure that's on insurers right now, partly because of climate change, partly because of all the fires, partly because of inflation, I'm seeing them a little less willing to waive the itemization than we've seen in some past fires. But again, I think the commissioner has taken his best shot at using his bully pulpit to get them to do that. And then under insurance, we did a workshop on that, and you can watch that. All the recordings of our webinars are on our website. I had two lawyers on there with us, 2 of the lawyers that have represented underinsured wildfire survivors and gotten settlements for them. Again, I'm not here to give you false hopes or sugarcoat the situation. I'm just here to give you some ammunition to, as I said, be your best advocates and do your best to try to get through this. You can't get through it painlessly, but you can certainly take lessons that other people have learned, and which is what we are here to bring you, right? And try to make it less painful wherever possible. On the smoke piece, it's really, it's kind of a very challenging situation for all of you. Again, I did a webinar on it 2 weeks ago. I had an industrial hygienist, I had a restoration contractor, I had a public adjuster, and I had a lawyer. You can watch the recording. It was about 90 minutes. We took questions in advance. I don't have a magic wand other than to tell you that you're not wrong to want assurance from a qualified professional that it's safe to move back into your home. That is, you're absolutely right to feel that way. And what we try to bring you is what's the proper order of having smoke damage remediated, clean, fixed. And it's definitely that: get somebody qualified to inspect, and test. If your insurer won't pay for that, then if we recommend that you not just sit there waiting and hoping that hire a lawyer or what have you. We suggest that you pay out of pocket for that testing and assessment. And then you get that to your insurer and you say, this is what these findings, these inspections, these testing by a qualified person, not an adjuster who doesn't have those qualifications. Those findings is what should dictate the plan for cleaning, and take it from there. So again, these things are recorded. You can watch them on our website, and they're there for you. Next slide. On the public adjuster piece, public adjusters are like every other profession, lawyers too. There's great ones and there are terrible, unethical ones. And the most important thing is to check references before you hire one and to be realistic about what it's going to mean when you hire one. You heard the gal from the fraud unit say she sees the fees running from anywhere from 10 to 30. You should not be paying more than 10 or 12%. That's just what most of the reputable public adjusters are charging. If you already signed that contract, there are remedies for, you can pay that person for the reasonable value that they can demonstrate that they brought, and then you can replace them if you need to. Again, it's another one of those buyer beware, because, the more underinsured you are, the harder it is for a public adjuster to have you made whole once their fee gets taken out of what they collect for you. On the other hand, a really good public adjuster is definitely going to get you more than you would get on your own, because they know all the nooks and crannies in the policy. They can do the math. They can show up and, meet with the adjuster on your behalf. They can go to the mat for you. But again, it has to be somebody who takes this job seriously and didn't take on more clients than they can handle. Same thing with lawyers. I've been hearing about lawyers advertising, oh, we'll adjust your claim for you for 10%, like a PA. I'm not a big fan of that, to be honest with you, for a lot of reasons. For one thing, as soon as a lawyer gets involved, your insurance company, they're going to hire a lawyer too. And right there, you're going to have some delays. And the other part of it is, if you're underinsured, you definitely want to consult with a lawyer. There's no question. But if you are hiring a lawyer to adjust your claim for you the way a public adjuster would, chances are you're going to end up paying more than you need to. Now, here's just a few of the reforms. You should have gotten that advance, the loss of use, 4 months, and you should have gotten your that advance of the 30% of your dwelling benefits towards contents. Hopefully, you all have the 10% code upgrade coverage that's required to be included by law. One other webinar that I did last month that I think is worth watching is your options for replacing your home. We talked about, I had a panel including somebody who burned down in the Wildfire and rebuilt. I had some other folks on the panel, and the gist of it is you have options because you live in California. And we have a law here that only 3 states have: California, Oregon, Colorado. You can take you can figure out how much your insurer owes you, and you can use that money if you have replacement cost coverage, and you can use that money to buy a replacement home or rebuild elsewhere if you just cannot face the idea of undertaking a big construction project, or you don't want to rebuild where you were. But again, that limiting factor is always going to be, what would they have owed you if you did rebuild? That's always going to be what they're going to give you toward whatever you decide to do, however you decide to replace your home. So, very few people rebuild the exact same home they lost. But what your insurer owes you is what it would cost in theory to replace the home that you had and that you lost. Okay, so getting on the same page with your insurance company about what that amount is, like what is the as was rebuild cost, is critically important. And a lot of people skip that step because they're like, I don't want to rebuild the same house I had. I get that. We get that. But you need to get that dollar figure agreed to give you freedom to then go ahead and do what you want. And when you do that calculation of what it would have cost to put back the house you had, right? You should include the upgrades that if you did that project, if you rebuilt as was, stick for stick, board for board, what code upgrades would you have been required to make and what would they have cost? And you got to price those things out when you're negotiating with your insurer, because otherwise the insurer is going to say, well, we're not going to give you code upgrade money for where you're going. We're only, and that's a, you know, so it's the code upgrades that would have been required where the home was. Okay. A couple more things. The DOI has both their complaint process, which is incredibly important. The insurers have to respond when you complain. They also have a mediation program that I think they will be advertising soon. Next slide, please. I think we're almost done. These are just some snapshots of what you'll find on our website, right? These are just some of the tips that you will find in the library that I shared the link to. Next slide, please. Same thing. These are just some of the pretty nitpicky type things that we offer that may answer a lot of your questions. Like, my adjuster came up with this number. Where did they get it from? Well, probably something called Xactimate. It's this computer software. So you can read Xactimate Demystified and learn about that. Lots of other kind of very important technical things that we illuminate in our free materials. Next slide, please. Same thing here. You know, if you're underinsured, what's the scoop and what are my remedies, right? Next slide, please. These are just some of the webinars that we've done. And for each of the webinars, we have the recording and then we have the slide deck that goes along with it. Next slide, please. So I just encourage all of you, if you're not already signed up, go to the library I showed you, go to our website and sign up. And then when we do an event, you'll get a notice about it. And then you can see down the road, we'll be offering pro bono legal help clinics, and more webinars. In addition, if you have questions that you don't get answers to through looking on our website and poking around and coming to things like this, and using the resources the DOI offers, you can post a question on our Ask an Expert forum. I think that's the end of my presentation, and I am so grateful to be able to be part of the educational program tonight. Thank you so much.
Amy, thank you. We're grateful you're part of this too, and I'm hoping we can induce you to come down here to Malibu sometime in the not too distant future and present live, because every single sentence that Amy just said opens up another half hour to an hour at least conversation. She's just the tip of the tip of the tip of the iceberg. As I've been researching this for years, and she knows way more than I do, and I know a lot already, and you're in for a lot of education if you're going to be able to get a successful recovery. And that is where you can get it.
Thank you.
So, thank you, Amy. Now, the other side of this, and you know, it was good to hear Amy speak well of Phil, because when I saw Phil's California Fair Plan public relations, I was thinking, oh my God. You know, this smoke damage issue, which is, again, one of many problems that you're all going to be facing, California Fair Plan, unfortunately, is the largest problem when it comes to that, because they are insisting that there pretty much is no such thing. So I'm hoping that Phil will address that among other things he's going to be talking about, because they've got this very strange provision that other insurance companies don't have and aren't enforcing, that requires essentially your stuff had to burn before they'll acknowledge that it's been damaged.
Well, without further ado, first I just want to thank Amy. I'm a big Amy Bach fan, and if you have not plugged in or written down her website or information, really stay tuned into the webinars, because obviously this crisis we're all in California it's fluid. It's been evolving, and I would say Amy's done a phenomenal job of keeping subject matter experts and topics and resources available and up to date, because again, where we were at a year ago, 2 years ago, 3 years ago, 4 years ago is different than where we are today. And again, I would just definitely encourage you to stay tuned into Amy's organization and the information that she's providing going forward. All right, so I just wanted to start, let's see, slideshow. Rob, I have a clicker. Where's the? Oh, okay. Oh, it's already up. Okay, awesome. Okay, so I'm just going to skip to a couple slides. So I want to start with just some frameworks. Everybody understands who the FAIR Plan is, and you may already know us, or you may already be a customer of ours. So my role, I'm the broker liaison. Actually, my official title, I'm the California FAIR Plan's broker liaison. So my primary focus is I do work with the brokers in the field and assisting with training and other means of support, and also do a lot of community education as well, a lot with Firewise communities and other areas. So I really get an opportunity throughout the state to get an understanding of what the circumstances are. The biggest area is the wildland-urban interface. I mean, those are really the markets or the communities which makes up the footprint of more than a third of California, so it really covers a lot. I actually grew up in these mountains and on these beaches here, but I currently live in Northern California in El Dorado County, and we've had our share of major fires as well. Okay, so the FAIR Plan provides basic property insurance, property coverage, regardless of property's fire risk, ensuring all Californians have access to peace of mind that they deserve. So it's intended as a temporary safety net for those unable to procure insurance in the voluntary market. So the FAIR Plan was established in 1968, and it was just after the time of the civil unrest in Watts, and I believe, I wasn't quite born yet, but I believe there was there's major fires in Santa Barbara in that same season, that same time frame as well. So again, that was kind of the catalyst that really created the FAIR Plan. So the FAIR Plan was created by statute, but not funded by or part of the government. It's private and not for profit. It's backed by all property insurance backed by all property casualty insurers licensed to write in California, and it's part of the residual market, and it's one of over 30 similar organizations in the states across the United States. So what makes us different? To work with the FAIR Plan, we have registered brokers that conduct business with us, but not on our behalf, and we do not market, or we do not endeavor to increase or keep our market share. Our goal is to see the market restored and get to a point where we are no longer needed in the marketplace. So we encourage insureds and brokers to regularly seek insurance in the standard market. So what that means is that at any point, there's an alternative to the FAIR Plan. There's no penalty to have your policy switched to another carrier. You'll be refunded your unearned premium at that point. So again, that's our goal for you, is to see the market restored or see you with a traditional carrier. So where we are today, and obviously we've had, we know this firsthand. So the Center of California's homeowners insurance crisis, responding to an increased need as voluntary insurers limit their policies in California. In the last 4 years, we've seen 400% growth, and we've grown to be the third largest insurer in the state. So obviously a sign that the crisis of availability in insurance is going in the wrong direction. When you're seeing us grow, an organization where our goal is to not be needed, and you're seeing us grow at the astronomical rates that we are, that's a very clear sign that the market conditions are going in the wrong direction. So our products, we provide dwelling policy for owner or tenant occupied homes, and also up to 4 units for tenant occupied dwellings, as well as renters insurance and condo insurance, commercial insurance, and also earthquake insurance through the CEA. So our dwelling policy, it's what's called a named peril policy, and it provides coverage for fire, lightning, internal explosion, smoke damage, windstorm or hail, explosions, riot or civil commotion, aircraft collision, vehicle collisions, and volcanic eruption. Vandalism and malicious mischief also separately available. For this product, we have available amount of coverage at $3 million today. Oops, how do I go back, Rob? Okay. And then our commercial product, which Rob announced, are looking to see that that policy grow from a coverage amount. Again, I would say one note to keep track of: whenever you see the FAIR Plan being asked to grow, add products, do more, again, those are obvious signs that the market conditions are going in the wrong direction for California. So for the property types that we insure for commercial policies today, 1 to 4 habitational units by a business. So again, if you own that, if you own a fourplex that's owned by an LLC or a business, then that would be available on this product. Habitational units with 5 and more units, retail stores, manufacturing risks, office buildings, course of construction, and also a farm policy. And then this, the commercial policy is also a named peril policy. We offer earthquake coverage through the CEA, so it's available if you have a policy with the FAIR Plan. And just some other information. So there's 3 elements primarily that the FAIR Plan does not have coverage for on its policy, and you would need, in order to get those elements, it's the three items are water damage, theft, and liability. So in order to get that coverage, you want to get what's called a difference in conditions policy. There's many of those available throughout the state, depending on the type of home you have and your circumstances. And again, so you would just get a separate policy to provide water damage, theft, and liability through a difference in conditions policy. It's also been referred to as a WRAP policy, companion policy, if that makes sense. Home hardening discount. So the FAIR Plan does offer 2 different discounts for home hardening. The first one is for protecting your structure, and then the second one, and that's 10%. And then the second discount that's available is for protecting the immediate surroundings, so that's defensible space. That's a 5% discount. And again, that would be applied to the wildfire portion of your premium, which is the majority of your premium. And you must meet all the criteria for each discount. And discounts can be obtained separately or together. And then, as Rob mentioned in his presentation, talked a little bit about FireWise community. So that's a 10% discount. If you're a community, it's a community-wide discount. As part of the FireWise community, you'd be eligible for a 10% discount there. And again, that's a really great organization. Again, another great resource too, if you are looking for advice on making your home more fire safe. That's a great resource to go to as well. I just want to talk a little bit about how we've responded to the fires in Southern California here. And our number one focus throughout the response of the wildfires has been on serving our customers and ensuring all covered claims are paid promptly. The impact of the fires reached far beyond the loss of the property, exacting a tremendous toll on families and in the communities. As an independent, not-for-profit catastrophic insurer, the California FAIR Plan undertook a series of actions to help our customers recover these horrific fires. So on the ground initially, our first focus was making sure that to support claimants and brokers. So there's a term, first notice of loss, and that's basically the claim submission. So we provided 7 days a week, twice a day. We had live webinars working with our brokers as a resource to help guide them through the initiating a claim process, because we knew of the surge of claimants that was coming our way, and wanted to put everybody in a position to where they would have the best information available, contact information, mailing address, just those types of things that seem obvious, but it's important in order for the claims examiners to be able to contact the claimants. We just did extensive training and providing resources to our brokers, making sure that they had all the tools they need, including emails and additional information to help them. Let's see, some other things. As Rob had mentioned as well, we supported we collaborated with the Department of Insurance with the workshops, multiple workshops that were available to meet with claimants face to face. Again, it was very useful events, and that's again something we're trying to facilitate afterwards virtually, so we can get to that after the meeting today. And then also with OES, we were at the disaster recovery sites, both in Eaton and at the West Side Pavilion. And again, I think we already touched on that, the community events we went to. And just some other resources, if you have any questions, our website's got a tremendous amount of information as well about the FAIR Plan. If you need to find a broker, make a payment, check your policy status, report a claim, there's a QR code, but you can also just go to the California FAIR Plan website at www.cfpnet.com. And then don't expect to be able to grab this QR code, but it's also available, and there's a table outside, and we passed this around earlier. So for this meeting specifically, we created, we were anticipating specific claims questions. So we have a team of remote examiners available to help you tonight until 7. And they promise, if they're not able to get to you tonight, that they will call you within 24 hours. So it's just a quick form. Basically, if you have your name, and if you don't have it with you tonight, you will be able to go home and do this when you get home, and you'll get a call, I promise. But basically, you just need your name, your claim number, your phone number, and just a brief description of how we can help you move the ball forward today. If there's questions or you're looking for follow-up or clarification, whatever it might be, we want to make sure you get the support you need in that respect. And then if you have a pen, I didn't write this down, but I wanted everybody to have my email address as well, because I'm committed to help you any way I can. I'm not in claims, but I have access to support. So if you ever feel like you're getting stuck or need clarification, I'm committed to getting you to the right person that will help you out. So if you got a pen, my email is PIRWIN, so it's P. Irwin at cfpnet.com.
Thank you, Phil.
All right.
So I'm curious, how many people here are insured by California FAIR Plan? Yeah, I mean, when I go around Malibu, I find that most people that have homes that have been destroyed or damaged are, in fact, insured by FAIR Plan. I think it's great that they're making this service available. Everyone should understand, and this is not intended to any ill will towards Phil or to FAIR Plan, but the insurance company, FAIR Plan, any other insurance company for that matter, they're not your friend. They're not there to help you maximize your recovery. They're there to do the opposite. They're legally obliged to pay your claim, but they're not going to necessarily help you maximize it. In fact, they're going to go do the opposite. So they all say the right things, and I'm not suggesting, Phil may be one of the good guys. I'm not suggesting.
Well, I'm a customer of the FAIR Plan too, and again, I wouldn't be here if I didn't believe in the organization. And so again, I don't want to interrupt, but we're here to provide you the support you're looking for, And the FAIR plan is different. And again, I'm not going to even speak to other carriers, but as a not-profit organization, we're here to help you understand your coverages and understand how to navigate your claim properly.
Okay, so we're going to start taking questions. I just want to just one last point about that. Yes, they're not for profit. They are in fact a member organization. They're funded by all of the insurance carriers, the for-profit insurance carriers in the state of California, and every one of them is going to pay their fair share of FAIR Plan's liabilities. So FAIR Plan itself doesn't work for profit, but everyone who has a financial interest in FAIR Plan does. And it's their interest in keeping that liability to all of you to the minimum. So do we have questions from the audience? Just step up to the 2 microphones and take your turns. It might be helpful if you were to indicate which of the speakers you think would be best suited to answer your question.
Thank you guys for coming out this afternoon. We do appreciate it. Rob, I'd like you to clarify something, please. You said that Commissioner Laura's emergency declaration that insurance companies could not non-renew could be 2 times. How does that work?
So that applies if a property has suffered a total loss after the emergency declaration. So those properties that have suffered a total loss, they automatically get 2 additional renewals on top of the moratorium. And because, they realize that the rebuilding process is going to last longer than a year, 2 years, and possibly even longer. So you're automatically guaranteed 2 renewals with your insurance company.
Okay, great.
Yeah.
But for other homes partially damaged, it's one time.
Exactly right.
Okay, thanks. And I guess it's 30% that the companies are supposed to supply for contents. I had heard something about 70%. Is that just proposed?
Well, some insurance companies have been paying over 30% and 70%. I think when the commissioner sent out the notice, he requested, we put out the list of insurance carriers who would comply with our request to pay more. And there's a list of them that are paying over 75%, right? Okay. And our Deputy Commissioner, Julio, she might be able to add some additional context to that.
Yeah, so thank you. And apologies for coming in and out. I'm just having some issues with my throat, so I apologize for that. But I wanted to make sure, just to clarify, the commissioner did request for all insurance companies to pay at least 75%. And so at that point, then all of the companies reviewed their policies and then submitted to the commissioner what they will do. We are, suggesting that everyone request to get 100% and see what the insurance company will do with you. And so, check our website, look at what they have, what your particular insurance company has said that they will do. But we have several who have actually done 100%, even just with a general ask.
Well, speaking of...
Scott, we need to move on to another speaker. Sorry. Okay. It's not a dialogue, it's a question and answer. Dean, you're up next.
So, Dean Winter, my house burned down on Big Rock Beach. I'm a California Fair. I got KW Specialty, DIC. I've got other policies. My dad taught me to be overinsured, right? So, in all fairness, I've had good experience initially with California Fair Plan. I've only had problems since you've added staff. The staff I've dealt with has been very forthcoming, but as it moves up the chain, I can tell management is holding things. And relative to some of the comments I've heard here, based on how you're structured, my belief is we're playing a cash flow game where you guys are not paying out because you're worried about cash flow for some reason. So let me just give you some feedback. Sitting through this for the last hour, I feel like I was violated again. And the reason I feel that way is because coming out of the block after the fire, I'm a very organized person. I submitted a bunch of things were moving, felt very comfortable, got about half my money. The people I deal with are very good. However, it's slowed. I submitted a full response the other day. In full transparency, I expect a significant, if not full payout by April 5th, but I'm extremely disappointed with what my neighbors are going through. So, question. Within the policy, I'm capped at $3 million California Fair. Okay? I didn't hear any discussion here tonight about Palisades fire victims and their special rights under the declaration of emergency relative to combining coverages, getting other payouts, various things. Didn't hear a word here. We're getting into the weeds too much, which I think is part of the game. Playing the game with you all is the wrong thing to do. We need to bring it up a level and make it simple. So my question, when I did my plan and my insurance relative to the dwelling A coverage alone, right? That was an estimate done by the insurance company. They wouldn't bind the policy till they came to the house and did an inspection, took pictures, et cetera, et cetera. So when I run a business, I do an estimate. It's pretty simple. I'll do the job for that. Here, full loss. I know it took the gentleman a couple of weeks to get in to take a picture and verify, even though we sent them Army Corps and other pictures that clearly showed nothing was there, right? To this day, they still won't do a full payout. Based on the estimate, the way it was done, the way it was bound, why will they not just pay it?
That's, again, it would come down to your specific claim and where it's at. But again, that's something we can get that answer for you this evening and figure out where.
So the answer is we're going to continue to play the game.
Well,
I got my answer.
I don't have your information. I don't have access to it, and that's not my expertise, but I want to help you. And I want to help you navigate this process. I don't want you to feel the way you feel right now. So I want to help. So I'm here to help you.
I feel good about mine, and I can submit the information to you, which I will, because
Okay.
I got the email.
Okay.
I need your help with
I
other
promise you. I promise you. I will help navigate the situation.
And please, I mean this for everybody up there. I'm not attacking you personally,
No.
but relative to your positions and what you hold,
Yeah.
I am. Let's make that crystal clear. My own opinion, all the things I heard here tonight, we're putting lipstick on a pig instead of fixing the problem. I'd say 90% of what we heard here tonight falls back on me as an owner. What am I going to do to harden? What am I going to do to protect myself?
Thank you for your participation. Listen, we need to have another one of these forums, but where we have lawyers and adjusters and we
That's my
address those
concern. We
issues.
shouldn't have to get there, Bruce. Because if we play
But
their
we do.
game,
But we do.
We're going to be doing it for years like you are.
Well,
Not good enough.
we're going to have that because there's no other.
We can connect. I'll be happy to help you.
Thank you,
I'll be
Dean.
happy to
Who's
connect.
next?
Hi, my name is Ted Krowick. Lost a house on PCH by Lacoste area. My question is probably for Amy. Amy, are you still in the meeting?
Yes, I am.
Okay, great. Thank you. So this is regarding well, the house was a rental. Luckily, it wasn't our residence. But anyway, lost just the same. So this is regarding fair rental value. So with our insurance company, so we have coverage for that, and they asked for documentation. So they wanted my Schedule C for 2023. I gave them information for 2024, and I gave them a bunch of comps for 2025. Well, they only gave me money for what's 2 years old in 2023. So I'm still trying to appeal with them, but my question is, whom can I use? Would it be a public adjuster or your company or whatever to help get some leverage to say, hey, fair rental value is 2025 numbers and not 2023 numbers?
I would go to a realtor. I would go to a local realtor and ask them for to give you a comp on what would I have been able to or what would the fair rental value.
Yeah, sorry to interrupt. I have already done that. So my question is, what do I use to have leverage against the insurance company to use those values rather than the 2-year-old values?
Well, if you've been the squeaky wheel and written them the letter and given them in writing, your document, I would start by filing a request for assistance with the DOI and see if one of their complaint handlers can get the insurer to come around.
Assistance with the what?
They have a complaint process, request for assistance, toll free, 800, or you do it online, and see if they can get the adjuster to come around on a fair rental value.
So go through the Department of Insurance.
I would try it.
Okay. All right. Well, thank you.
Okay, we were fortunate enough not to lose our home, but we pretty much can't get insurance right now. We had State Farm, who non-renewed us, who we were paying $16,000 for last year. Now, to get full coverage, it's going to be over $100,000. So, we, after we had State Farm and was non-renewed in December, we had another non-California admitted policy who turned around and canceled us after the fire because our roof was 25 years old. So, and they still have not refunded part of our $42,000 premium. So we do have Fair Plan for $3 million, which doesn't even begin to cover everything. So one question for Fair Plan, is there any consideration of raising that limit? And we have been told that if we put the home in an LLC, it would be a business and we could get the larger amount of insurance. I've also heard that that's a fee, and if you're not really a business, that Fair Plan may not pay. So I am interested in Phil's comment about putting a single-family residence that you live in an LLC to get a greater amount over $3 million. In addition to that, it's just as for Rob, what are they doing to try to get California admitted companies back into California, because the insurance is just crazy. For us to get an additional excess policy over the $3 million Fair Plan, it is more than $25,000 per million, which brings it up over $100,000 by the time you add in liability and a DIC policy, which is just not, it just doesn't, you can't do that. So I don't know what to do as far as getting our home insured right now.
Okay.
We're definitely between a rock and a hard place.
Understood.
Before others respond, also I want to ask, I'm sorry, I forgot the names. The fraud investigators to respond also at appropriate time to this issue of an LLC and trying to get higher insurance, because I think that opens another can of worms.
Well, okay, I was going to say I've got a quick answer for that one too. So first off, understand, obviously, there's lots of homes out there that 3 million TIV is not adequate for, and it's twice what the coverage we had a few years ago. And, again, it's not written in stone, but watching what the direction we're going with the commercial products to accommodate the needs, I'm sure at some point we're going to be increasing our TIV. But again, like I said, the more we're going in that direction, that's showing that the state is going in the wrong direction. Putting it in LLC, even if it was on a commercial product, the limit would be 3 million, even though if it's a dwelling, even on a commercial product. So there's two ways people use the commercial policy to write a home, a dwelling, and that's in an LLC, or if it's a course of construction. So those are two examples where, even though it's technically on our commercial form, the TIV amount is still capped at 3 million. So it would not help you in that situation. But I'll put my broker hat on for 5 seconds. There's an organization I think they're in CME, called WOWS, WOWS, that is an excess policy that's pretty reasonable. I haven't personally seen it priced, but I've been hearing a lot of chatter about that they have an excess policy to the Fair Plan. So again, I would just maybe look at that as an alternative too. There's a couple of those out there that gone on and off the market, but it's an excess policy. So you can
Find that.
just look at WOWS. Okay. But hopefully that answers your question. Again, more than likely at some point we'll probably have more than a $3 million limit, but that's not on the table today.
Okay, and you're saying, excuse me, you're saying that the LLC does not work to get additional coverage.
You would still be limited to 3 million,
Still
correct?
limited to that.
Yeah.
Also, I would be interested in Bruce's question about the smoke damage, because we've heard negative comments about that.
Yeah. Well, basically, it's direct physical loss. So it's the contract it was established in 2017. And so again, that's the difference. So where cleaning is if it's something that can be cleaned and doesn't leave a stain, more or less, then it's not a direct physical loss. Again, I'm not a claims examiner, but every circumstance is different. So you'd want to just with a blanket say it's not covered isn't appropriate. In any type of claim situation, you want to work with your specific situation, your loss, and your adjuster to really understand what the dynamics are with your claim.
So Phil, are you saying that if toxins are in the material and can't be washed away, despite the fact that you can't smell them or see them, you've got no loss?
I'm not going to I'm not here to debate
answer is that is their position. There's no loss even though your home and your contents are contaminated and they are unhealthy to live in or utilize. So that's what Amy was referring to when she said that she writes friends of the court briefs and that there's a litigation ongoing. Fair Plan takes the position that you have to smell smoke or see smoke, and then you have to wash it. And if you can possibly still see it or smell it, then they'll consider covering it. Am I misstating Fair Plan's position?
I'm not going to comment on litigation or our position, but basically there is smoke coverage, and it's specific to direct physical loss. It's basic. It's a basic policy. It's been this way since 2017, and again, that's something that you'd want to when you're buying a policy, you're going through your coverages that are customizable. That's something you want to review with your broker at the time.
Okay, I'm going to ask also, Rob, could you address explain this 85% coverage issue? That the new is it new legislation that's going to require the insurer, the real insurers, not the Fair Plan, to cover 85% of properties? Exactly what does that mean? How does that work?
Thank you for the question. What we are doing is trying to really bring insurance companies back into the market. So that is, we are allowing them to use the catastrophe modeling. We're also allowing them to use reinsurance, which is something that they had requested. And we continue to do our due diligence to try to get, to mitigate the risk. So what, in response to that, then what the commissioner required of the insurance companies was, then if you are going to be using those things, then you must write at least 85% of your new policies need to be in areas with high wildfire risk. And so we are expecting that we will be done reviewing the new catastrophic models within the next, I believe sometime in August or so. That's when we are expecting then all the insurance companies to then review all of that, turn in their applications for new premiums so that we can review all of that. And then the expectation is that by next year, then insurance companies will start writing again in particular areas. The reason that we are telling people that they should look into, that they should do their best to rebuild safer, to do safer from wildfires, to get, make sure that their homes are mitigated and all of that, is because then at that point, insurance companies are going to then start looking for what are those homes that are the safest, that have the least amount of risk, that they can actually do that with, and that they can get out of the Fair Plan. Because the whole expectation is you must write in these particular areas, but then also you must depopulate the Fair Plan. And so those are the people that they're going to be looking for to insure. And so at that point, we're expecting that we're going to have a lot more availability. We have not talked about affordability because at this point, what we're looking for is making sure that insurance companies are here. Right now, the way that the insurance crisis has been very much so us as consumers running after insurance companies, begging them to cover us. And so at this point, what we want to do is basically change that tide so that then insurance companies are going to be wanting to do more business in California. California is the largest insurance market in the entire country. We are only second to China with as much business as we do in the insurance space. And so insurance companies do want to do business in California. They don't want to have those losses. So what do we need to do to make sure that they are able to do business in California, is make sure that our risk is lowered and that we get a lot more insurance companies writing. After the wildfires, immediately after the wildfires, in January, the commissioner and the governor got together with the top 15 insurance companies that sell homeowners insurance in the state, and they all very much so said, because of all of these things that we are doing as a state to make sure that this is happening, we will continue writing in the state. We will be writing again in the state. We have gotten responses from Allstate, from Mercury, and from others that are saying that they are going to most definitely be writing again in the state.
Is the 85% collectively, or each of them must have 85% available coverage such that everyone will be covered by all of them?
The expectation is that 85% of the areas that are high wildfire those are going to be covered by the entirety. Now,
So 15% will still be left uninsured.
That's what we are. There are some homes that we will not be able to cover because of, maybe how much it is coverage, or there's several different things. Now, this is also not going to happen overnight. This is something that is going to take some time to get there. But we as a department have been able to actually get all of those things, all of the regulations and everything done within 1 year. In 2024, we are making sure that we're reviewing all of these new catastrophe models, getting all of that done within 1 year. And so expectation is that, beginning in the new year, we should have a lot more availability.
All right, thanks. Does anybody else want to respond to any of the last questions, or should we move on to the next person? Okay, over here.
Mine's about debris removal when you don't have specified debris removal. And it's about when you get to the end of it. There's always talk about no out of pocket, but when you get down to the end, where do you stand? There was a bulletin out by the Insurance Commissioner January 30th saying they'd limit it to 5% and reasonable rates. But is that going to apply to all the insurances? Because when the FAIR Plan says, well, it's not specified. And so it may be that there being no cost if you do not have it, but they don't have a set amount. So it's unknown. Hopefully it'll be free. But how much will the amount be? Can it be limited to 5% and a reasonable amount? Will it match private? That's the question. How is the Insurance Commission office responding to that?
So you're saying in this scenario that there's no specified debris removal coverage in your policy, correct? And in cases like that, typically, if there isn't any debris removal coverage specific debris removal coverage in your policy, then there really isn't any coverage for the county to collect from. So that's why they mentioned.
Saying that there is under the umbrella of the policy, in the main policy, it says there's debris removal, and that they can go after that if there's any money left, as if there's going to be. You're terribly uninsured through FAIR Plan. But
so there is debris removal, or there isn't?
There is under the general plan, but not specified debris removal.
Okay.
Let me see if I can help with this question, because I think I understand what's going on. I mean, as I understand it, if your policy does not cover debris removal at all, you've got no access to coverage for debris removal, then when the government does your debris removal, it's free. There's no clawback. I think this questioner is asking if it's one of the things you can tap into your dwelling coverage for, even though it's not specified as 5,000, 10,000, 20,000, but it's one of the things the insurance company will in fact cover when you submit the bill. Does that make it something that's no longer exempt from the government clawing it back?
Yeah, that's a tough question. You know what? I think I talked to you over the phone about this. We were talking about this, and I mentioned, because it's under the FAIR Plan, to talk to the FAIR Plan. Was Phil, you were able to give him an answer about that?
It's not really an insurance issue. It's a government. It's an issue vis-a-vis the Army Corps of Engineers or the county. But I mean, if Phil has better information on that.
Again, just as far as an option with the FAIR Plan, the flexibility you could access, because if in the scenario that it was not allocated specifically, then you could use up to 10% of your dwelling coverage towards that cost, but it would deplete from the dwelling coverage itself.
This question is about, if you don't access it, will the government nonetheless claw back 10% of your coverage because you could have used up to 10%? And I think you need to get that answer from the federal government or the county. Unfortunately, it's an ambiguity in their policy.
But again, on January 30th, the commissioner put out the same thing, limited it to 5%, and it should be fair market costs. And yet, is that going to be something that can be imposed on all the insurances, or is that just a suggestion?
One of the things that we are asking folks when they're going through that specifically, and you're going to hear us all the time say, please call the department and talk to us about it. When you call and actually talk to one of our experts, they then have the ability to do a lot more research individually about your particular issue and try to figure out exactly how they can assist in that sense. But because it is something that the county, it's the Army Corps of Engineers that they will be then giving that bill to the county, and the county will be then getting that paid. That's why it needs to be. It's something that is completely separate from your insurance.
Answer this one. What if it's such a scope of loss that, because it's so underinsured, would they consider that just as kind of like a wash as use of all funds and just let it set?
Well, I guess again, in those scenarios when all of your limits would be max paid, basically, it would still be the same maximum amount of dollars towards your loss. And you would determine what you're going to pay it towards.
The answer is supposed to be that if your insurance coverage is inadequate to cover your entire rebuild, you shouldn't have to pay the cleanup that the government did for free. If you have excess insurance, they may be able to tap into it to this 5 or 10%. But this does need to be clarified with the county because it's an ambiguity in their, not an insurance policy, but in the policy of the county.
So Bruce, if you don't, Councilman, it's Amy, I just want to say for each of the areas where there's been a coordinated debris removal, there has been, we've seen different approaches taken by the counties in terms of clawing back. In this situation where especially for somebody who actually doesn't use the money to rebuild. I mean, the idea is to prevent double dipping, right? You're 100% right that the county needs to clarify it. My hunch is they will not be going after people who, who didn't, who are underinsured. But again, I can't, it's something you got to get clarified by the county, just like.
This may be something that we can reach out to the Board of Supervisors and see if we can get them to help us get some clarification. Question at the other end of the room?
Yeah, thank you all for being here today. It's really useful, and thank you, Bruce. My wife and I live in Carbon Canyon, and our house is still standing, so to speak. We're sort of in a purgatory. It's the only structure that remains on the road, a road that doesn't have electricity or water today. And the heat of the fire, our house burned twice. That was a unique designation. It burned 12 hours after the first fire went through, and it roasted from both sides. So some of the windows in the house melted, and there's a lot of holes burned in the roof. The main part of this curved roof of the house is a Class A fire-rated material that held up extraordinarily well. It did not ignite, but after the fire now it's a sieve. So a house that didn't have leaks before, now water comes in through the whole ceiling. And our contents are history. It doesn't matter if it's clothing, bedding, furniture, the varnish on the floors, the whole floor has to come up. Everything is discolored, has changed. So I'm not talking about smoke damage. It's the fact that all of our furniture can just go into a dumpster. But we're looking at a lot of work just to restore the house to the way it was the day the fire hit. And we have not, it's California Fair Plan. And we have been able to get some loss of use coverage. You guys have a different term for it. But the first adjuster came out end of February and spent 4 hours videotaping it. And he was rather astute, knew exactly what he was looking at. We discussed it at length. Then I heard nothing. And we've been through a series of desk adjusters. And then they sent out one more adjuster who spent 4.5 hours videotaping everything, including studying the roof and what happened to this material that was once waterproof in this heat. It's pretty obvious. The building, things were over 200 degrees. So when I walk into the room that served as my office, the mouse has become part of the mouse pad. You turn on the computer, well, it doesn't turn on. You can take the hard drive out, and even the hard drive can't be transferred and downloaded. But so I'm stuck with my office being down. I can't live in my house. And we haven't been able to get any responses from the Fair Plan.
Okay. I'm really sorry to hear about your experience. I would suggest that we go through after the meeting, we can fill out that form together, and we can put some notes in. I want to make sure you have my contact information. We can really get a look at where things are at with the process so far and what we need to do to get it moving better for you.
Thank you. At this point, is the best thing that I can do is put together an inventory list. Is there a specific form? We've not been given a form what to do with. We photographed everything that was in the house. We haven't put it all in the second dumpster, but we're just emptying the house, and we're trying to protect our home from further damage.
Yeah.
We have a swimming pool, for instance, where the pipes melted, and so the pool started to drain. About a week after the fire, we saw that the deck was lifting because the pool shell was lifting. And now it's rained some more, and the pool's drained completely, and it's broken up the whole, there's this, whatever other damage is coming up now because we're not able to fix things.
Yeah, understood. Let's keep it right at this stage. I want to engage the team that's on standby to help us tonight and just give a brief overview of what you just described. And we're going to get involved to make sure that everything is moving and the right people are getting their hands around your circumstance.
I want to recommend you call Amy, and I want you to recommend you speak to the insurance commissioner's office. You have a total loss pretty much. It's not technically a total loss, but you're going to hit your policy limits and make sure you get every penny.
Thank you all.
This side.
Thank you. My name is Jeff Schobring. Amy, hi.
Hey, Jeff.
How you doing? And the gentleman in the blue jacket that talked about his fair plan policy and having all these problems, you need a public adjuster, and your neighbors need a public adjuster. Well,
Maybe.
maybe. I'm a public adjuster.
Maybe was not a no. The maybe's a maybe.
What was said in relationship to fraud was very offensive to me and my constituents. Public adjusting has nothing to do with fraud. If you take into consideration how many public adjusters you investigate, compare that to how many insurance companies you investigate, it's minimal. One of the more serious violations by a public adjuster was, I don't know if anyone remembers smoke.com. Anyone remember them? Raise your hands. Anyway, they were a public adjusting firm that got a license. They weren't vetted, and they were allowed to have a license, and they were running amok, signing up smoke claims and doing all kinds of things that were in violation of the Public Adjuster Act. I'm the former president of CAPIA, which is the California Association of Public Insurance Adjusters, and in that position, I saw what was going on immediately. And I went to the Valencia office and I filed a report with Carlos Gonzalez. Do you know him? He's one of your deputies.
What you're saying is valuable, and I actually agree with it, but do you have a question for our panelists? Because
If we as an industry see somebody doing anything that, if we see somebody in our industry doing something wrong, we jump in and we correct it. To compare us and equate us with fraud, which is something your department does every major fire, is wrong. We're getting tired of it. We do a service, and when we get hired, first of all, we are the enemy of the insurance industry because we get insureds more money. They don't want to do that. You are acting as agents and servants of the insurance industry by helping put out bad information about public adjusters.
do you have a question? Seriously. I mean,
Yeah, why do you always have to equate public adjusters with fraud?
okay. Do you want to answer that?
So basically, I believe that our regional investigator said that not all public adjusters, there are a few bad apples that give a bad name to the public adjuster industry. So again, we're not here to condemn public adjusters. However, we do get referrals that involve public adjusters, and that's why we look into them. And we just want to make sure that that information is out in the public. We want the consumer to do their due diligence and make sure that they know exactly what they're getting into. So if you found it offensive, we don't mean to offend you, but we do want to make that warning out there that there are contractors and some public adjusters who take advantage of the situation. So it wasn't to offend you.
If we hear about it, we report them.
Thank you, we appreciate that.
And as I said, I think we need to have one of these town halls where we actually have public adjusters and lawyers, and they can explain the need and the process, because I agree with what you've said, and I was actually offended a little too when I heard it, but I also understood the context in which it was presented. It wasn't intended to suggest that that's the fraud that's going on, but I heard it too. So let's move on to another questioner. Thank you. Somebody at the other end?
I'm going to ask a quick question for a homeowner who lost his apartment complex, and he didn't want to come up and ask, but this is for Fair Plan, the question. He was sold a policy, and this is directly to you because you deal with the people that sell it, and he was never offered. They told him, we're going to sell you $1 million worth of coverage, and it's going to at least cost $3 million to rebuild. So he's wondering why he was never offered additional amounts. And he's an immigrant and a senior citizen, and he's concerned about the way the product was sold to him. So maybe you can, shed some light for him and see what kind of remedy he may have for that.
Yeah, I'll tell you, that's very tough. That's very tough to see. There's lots of opportunities in our industry where, and again, it's not tied to a carrier. It's more ethics of the individuals that are selling the policies. There's a rule of thumb. First and foremost is making sure the home is insured to value. The building is insured to value, which means you've gone through a replacement cost estimate of some sort to determine your best guess at estimating what it would cost to rebuild a structure. And you start from there. The Fair Plan policy is customizable, so every component is customizable. The amount you and your broker go through together should make sense to the consumer and should be discussed. It's not packaged and defaulted amounts like an HO3, a packaged homeowner's policy is. So it's very important for consumers to understand the coverages they need and to go through that process with their broker and maybe shop with multiple brokers just to hear different schools of thought. It's very tough to learn, to have an experience like that. It's tough for me to see it. It's tough for me to hear about it. And even with the best intentions, you can still end up underinsured because, the replacement value it's a moving number. And I've talked to a lot of people in Palisades too, and some of the replacement, and I've talked to contractors too, and some of the replacement costs or cost per square foot that I've been quoted, it's higher than almost anywhere else in the state, but it doesn't surprise me. I'm not saying it's not, but it's just a factor. You have to understand it. California's unique where if you took the same building and put it in almost any zip code in the state, it would be a different number. And but it's something that the buyer of the policy should understand, that it's important to make sure that the coverage is correct. And it's, again, I'm sorry to hear that.
The gentleman's been at every town hall meeting, and maybe afterwards you can at least listen to him, because this deals with something that that's your deal.
With rare exception, homeowners or business owners in Malibu and the Palisades who are relegated to Fair Plan need $3 million coverage, full stop. I've been speaking to so many people who had dramatically, Fair Plan's inadequate in the first place. That's not a diss on Fair Plan. That's the statutory maximum. But if you own a house in Malibu or if you own a house in the Palisades, you needed $3 million between your ALE, or they call it fair rental value, your code upgrades, your dwelling replacement, your contents. There's no way if you had a total loss, you didn't have a $3 million loss. You had a $4 or $5 million loss, many times more. So anyone who had less than the full coverage needs to be talking to a lawyer about a claim against the broker for errors and omission. That's what has to happen. Fair Plan can't fix that.
And another question. This goes back to the smoke and your position on the smoke. In your policy, there's some it is written where you have a remedy where you're going to take to see if there is actually damage, where the insured has a representative and Fair Plans has a representative, and then the third party will say there's either damage here or there isn't, and that's written in your policy. So when are you going to start? Because people are sitting, can't move in their homes, they want to move on. So when are you going to use that remedy to try to settle those smoke claims?
Well, again, every case, every individual claim, again, has the opportunity to. They're all at different stages, and the circumstances are different, and that's why we would encourage those claimants to work with their examiners to initiate whatever steps they feel necessary. And again, that's why we're here tonight, and we're providing the escalation team that we have available to really, if there are areas where we can provide additional support or clarification or get the ball moving any way possible, that's what we're here to do tonight. So again, it's a QR code that's out in the lobby, and we'll have it available, but we want everyone to have access to that tool and that team that's on standby to help you all this evening.
Before we move on to the next person, also that provision,
What you're saying is that you will do that?
If
it's written in your policy?
Again, based on the original, if that's an area where that term would be exercised and that the circumstance of that claim, which is specific.
You're going to follow your policy then?
Right, we absolutely will follow our policy.
It may not be in you or your client's interest to pursue that remedy under their policy. It may be an illegal provision. It may not work to your benefit, and you should be speaking to a professional before making a decision. Okay.
Hi, yes, Palisades resident, total loss. One comment, one question, probably geared more towards Rob, Julia, and Amy if she's still on. The comment is I applaud SB 495, and I hope you guys all do all the advocacy you need to push that through. I would strongly encourage you to, of course, try to find some way to make it retroactive to January 1st of 2025. I understand there's challenges with that, don't get me wrong, but try hard for that. You know, I wish people after Santa Rosa and after the other fires in Northern California in 17, 18, all stuff had pushed all this so that we could have benefited from it, but I applaud that. Please advocate for that. My question is this. Myself and a number of people that I know have very similar policies with different carriers, private carrier, not fair plan. And I've lived in my home for 23 years, and when I set up my original policy that I continuously paid with one carrier the whole time, I felt I had adequate coverage in the cost to rebuild, the amount, the rate, if you will, on a kind of a per square foot basis. I could really actually rebuild my home for that cost at that time. And I paid premium for those 23 years to keep that current in the marketplace. And my policy says that is to keep it current at the rate and the cost of construction within my zip code, which is the Palisades. I've come to find out, of course, that they did not keep it current with the actual cost of construction in my zip code. And I'm wondering what can myself and people like me that are in this situation now, I'm offended by saying that I'm underinsured. I'm not underinsured. I've been improperly valued by the insurance carrier. And so what can we do now to help us now, and like SB 495 for future generations, what can be done in Amy's organization and CDI to make sure that this just does not continue as egregiously as it has?
So if I can take a crack at that, first of all, we worked really hard to get either 100% or an 85% contents payout in the event of a total loss through the legislature. And the best we could do ended up being what we have, which is the 30% of your dwelling up to 250. Now, again, that's the sausage factory that is Sacramento, okay? But my God, we brought people from the 2003 fires, you know, with a blown up picture of their inventory showing how humiliating it is to have to list, you know, tampons and whatever. So that was then. On underinsurance, and you make a good point. You make a great point about, you know, that it's not that you're underinsured, you were the victim of flawed replacement cost estimators. The San Francisco Chronicle did a big story today on all the work that our organization and the DOI have done to try to get insurers to stop using these calculators that skew low. The reality is, you know, people do shop on price, and that creates kind of a pressure at the point of sale. That doesn't make it right. And I would just say, what can you do is get together with other people who are underinsured with your same carrier and talk to some of the lawyers that have experience in prosecuting underinsurance cases. And you can see a couple of them on our panel. But there was just a presentation last week at the National Association of Insurance Commissioners about the fact that, you know, the DOI, they had a year of hearings. They put this reg out that says when the insurer sets your limit, they have to factor in a whole long list of things so that they don't miss anything, right? And we thought that would really move the needle, but it hasn't. So I think now we're kind of back to the drawing board, and I'm sorry that you're having to struggle through this, and basically having recourse only through the legal system.
Yeah, I mean, that's unfortunate. And, their calculators or models or whatever they're using, I'm sure are based on some set that they try to replicate for all their policies for a given carrier, but they're not they don't skew low. They're egregiously low.
It's the flip side of the Xactimate, which also is skewed low for determining what the damage was.
The national average of your couch, is different in Los Angeles than it is in whatever, Ohio. I'm not picking on Ohio, just it's going to be different.
Right.
I'm with a private carrier that said no to Commissioner Laura's encouragement of 100%, at least 75%. They were one of the 4 or 5 major carriers that were like, no, we're not going to do that. And so we're stuck at a low number in terms of a percentage of replacement costs. And I would love for SB 495 to be retroactive for all the fires in California. I mean, Eaton and Palisades, yes, massive fires, but there's other smaller ones that have happened this year too. And I get the challenges. How far do you go back? Why can't I get all that. It's still current. And Amy's organization, anybody listening, we need to advocate for this because 495 needs to get passed so that people down the road, which could be us, you live in Malibu and now maybe the Palisades, who's to say this isn't going to happen 5 years from now, 10 years from now, 15 years from now? We need these things in place to protect us then.
Okay, thank you. We've already gone past 6, but we have 2 people who are standing, so let's take their questions, if that's okay with the panel, and then we'll cut it off and meet people in the hallway.
Thank you. My name is John Shehorn. I'm a CFO for a hair salon in Malibu. Here really representing all the small businesses, and I'm talking several hundred, maybe close to 1,000 small businesses who are struggling with business interruption insurance. In our case, I was told it was a civil authority and there were limits. So I read the fine print, 81 pages. And yes, there was a 3-day moratorium that we weren't covered for the first 3 days. I guess it was it January 7th through the 10th. But we were covered for 4 weeks. So I proceeded to go to our carrier and submitted what I thought was a reasonable claim. Didn't know the number. I just said, here's the situation. What are you going to give us? He came back with 0. So I wrote a pretty nasty email talking about the fact that we have paid the premium in full. And according to my calculations, we're about $60,000 loss for that period of time. Hair salons, luxury hair salons, do make a pretty good profit. So my question here is, and this is for all the small business, what is the appropriate way to fight? Because I finally got them up to $33,000. I'm still at 60. My last email to them was, hey, why don't we just compromise? I'm willing to compromise. You're 60, let's come up with something reasonable. And they've said no. They said I would call it creative accounting, shows that it's only $33,000. For a small business, $30,000 is a lot of money. If we can get this additional $30,000, my question is there an ombudsman, or do I just have to make a complaint through the process, the online process, which I know we have with the insurance? So what do you?
So the Department of Insurance has our 800 number. I know when you think of 800 number, it's just, oh gosh, you're gonna go into some abyss. But we actually do have people who are there, and our wait time, if any, would be 1 to 2 minutes at the most. So we do absolutely have people there that will be able to talk with you, go through it, and then they will contact the insurance company on your behalf to try to get some answers. And so normally when insurance companies do hear from the department and they've already been working with you, they will do a little bit more
You
of
would be
their
an
best.
advocate for
Yes,
the small
that's exactly what
That's
we
all
will
I'm
do.
looking for, rather than
Yes.
hire an attorney and all the
We
other.
can assist with your complaint, and if you would like to have your elected officials to help with that as well, you are certainly welcome to share your complaint with them, and then we do have also an office of the ombudsman within the Department of Insurance, and they will follow the case as well and keep you and the elected official informed of where are we.
Thank you
on
very
that.
much.
Thank you.
Okay, last question.
First of all, thank you for this opportunity. I may have like a special questions. Our house was burned totally, and before it burned, few months before that, my wife was passed away, and she was taking care of that house, including what we had inside. It is a big house, so appliances and furniture, roughly I count about 30,000, and FEMA asking us any receipts or something like that. We had in that time problems with the tenant, and I stopped actually after they told me, the FEMA, after told me to have some papers about that. So I didn't do anything, and this is one of these laws. The other thing which is bothering me, the debris is still there. And now I am dealing with the insurance. They told me you are now responsible, your name, it is under your name. But I have a lot of calls to give lawyers to take care of that. So it is 3 questions, and I am sorry if I am bothering you. I know you are here for insurance, but this is the situation.
What are your 3 questions?
Can I have any substitute of furniture and appliances?
So typically with your insurance care, this is kind of what we talked about with like contents coverage and stuff, that depending on your policy, they should be replacing some of those items that were damaged in the fire. So that's, where you would talk to your insurance company about filing a claim for replacement costs and replacing all the furniture, the appliances and things like that. And that kind of goes back to what we're talking about. Did you suffer a total loss of your home, or yeah. So, and that kind of goes back to the conversation where we're talking about, like, by default, they should be giving you at least 30% of that insurance money for contents coverage, no questions asked, without a list or anything like that. But, depending on your insurance company, they might pay more than that. They might stick to that 30%, and they need that itemized list. But yeah, that's what the contents coverage is for, is to replace those personal belongings.
Thank you. What about debris? It's still there.
The debris?
Yeah.
So in that case, that's where the LA County debris removal program comes into play. So if you have debris removal coverage or not for your insurance policy, that's where you need, if you want the county and the Army Corps of Engineers to clean up the debris, you've got to fill in that right of entry form to authorize them to go into your property, to clear out the debris and take care of it.
I did. We did, actually. My daughter did that.
Okay, and I think they're still going through the right of entry forms, and it's going to take some time. But as long as you have filed that form before the April 15th deadline, which it sounds like you have, they should be getting to your property, as the process goes along.
Get confirmation that they've accepted.
Yeah.
Okay, I asked about these lawyers who wants to take care of that, but as I know, they are they are taking third of the amount. So it doesn't look for me fair even. So here, take the responsibility on ourselves without the lawyer will be okay.
So you may need a public adjuster, you may need a lawyer, you may be able to do it with the assistance of United policyholders and the Department of Insurance. Every matter is fact specific, and I would encourage you to begin a conversation at least with United policyholders or the insurance commissioner's office, and then depending on what answers you get, you can consider whether you want to move on to either a public adjuster or a lawyer. Okay.
Thank you very much.
Sure. Now, I neglected to say we had some questions online, which I had forgotten. If I can indulge upon the panel, they won't be a back and forth because they're in writing, so maybe we can get them out, knock them out.
Thank you, Council Member. The Army Corps did not remove everything such as fences, outdoor furniture, and burned down trees, so I have paid out of pocket for this, approximately $45,000. I do have debris removal in my policy with California Fair Plan. Will this be reimbursable?
What was the specific question about what will be reimbursed?
There's excess debris that the homeowner had to pay out of pocket for to have their property cleared.
If you have debris removal, I would imagine that would be covered, but we'd have to take a look at the specific.
And I will say, in general, when there's additional debris removal that the homeowner still needs to do when, the Army Corps of Engineers have already done their thing, homeowners should still be able to access the debris removal coverage to pay for that. So it might be that this homeowner might just need to file a claim with the Fair Plan to get reimbursement for those funds. And then if there's debris removal funds remaining left in your policy, then that's where later on the county will come in and take payment for that. But going back to what Phil said, you might want to register with Phil and the QR code right now so that they can, the Fair Plan can help you out with that as well.
I believe the way the specimen Fair Plan policy works is that you've got a certain amount for dwelling replacement or repair, or just to pay for what you lost. And although you don't have a specified debris removal, you're allowed to use up to X% of your dwelling coverage to pay for debris removal if you didn't separately purchase debris removal coverage. So if it falls within the amount, the percentage of the dwelling coverage that's set aside for debris removal as an option, that's how you cover that.
Thank you. Next question. My home was a total loss. As per my California Fair Plan insurance endorsements, I had the actual cash value coverage and building code upgrade. The terms state that if the dwelling is completely destroyed, this coverage pays the fair market value of the dwelling at the time of loss. Instead, my desk adjuster has calculated my benefits based on itemized field adjuster estimates, which is considerably lower. Please advise.
Again, I would just suggest you give us, we can share the QR code, but we can look at that specifically because, again, we'll make sure that that is acknowledged and we can give you clarification on that specifically.
Thank you.
And if that person's online still, it's not the fair market value of the property, it's the current value of the dwelling, not the property itself, because that has substantial additional value for the land.
A few more questions. We are still waiting on a settlement letter from California Fair Plan. We submitted a rebuild quote at approximately $700 to $800 per square foot. Will they pay the maximum dwelling A and all of the maximum coverages on our policy if this exceeds them? What do they base their rebuild quotes on? I have heard rumors that California Fair Plan only pays $400 per square foot, which is approximately half of what it will cost.
No, it would be whatever the specific amount is determined. There's not a set cost per square foot on settlement. It's based on your coverage and again, what your claim settlement options are. So again, if you could give us that claim information, we could make sure we get that as part of the escalation team, if we can get the claim number and phone number, or if they've got access to the QR code online, that would be a good place to go. They're on standby right now.
And again, speak to Amy in the insurance commissioner's office and possibly a public adjuster.
And then the last question is, there's multiple questions stating that California Fair Plan has only paid a portion of the dwelling limit as an advance, even though they have received pictures of the houses being total losses. What can they do to compel California Fair Plan?
So again, if you've got depending on the stage that your claim is at, that's something we can check on today. And if it's something that everything is in and it just needs to be moved forward, we can take a look at that specifically, or it may be a case that there is something that's still being determined. So either way, whatever the specific claim is, I would suggest you utilize the escalation team that we have available this evening. They're on standby to help you with your claim specifically and moving the ball forward for you.
And the last question that they're seeking comment on is, insurance companies all use different vendors to do the fire score, and it is listed on your bill with no information on how it is calculated. Can these things be regulated more?
Hi, I just actually did a little reply to that one in the chat, and I apologize if that's going to screw up the answer. I mean, the bottom line is there that we do have in California, there's a couple of rules that should help you. The rule that the insurer does have to give you a discount if you meet one of those two mitigation standards, either the Safer from Wildfires or the Wildfire Prepared Home. And I put a link in the chat to the resource center on our website that tells you where you might get help in your area, and then how to present your evidence to your insurer that you reduced risk.
And that concludes comments on Zoom.
So several insurance resources will be available in the lobby for one-on-one assistance. I encourage everyone to take advantage of this opportunity, but again, I'm going to caveat it. This is not the only people you should be speaking with. Lastly, I just want to thank you all for participating today, including our panel. Thank you very much for coming here and participating. And Phil, sorry you have to be on the hot seat there.
That's okay.
It's not you, it's your employer.
We can disagree, agree to disagree on that. So again,
we can.
That.
We'll continue to host town halls on various issues, including, I hope, one that'll dig deeper into the issues that have been the subject of a lot of the questions today. And if you want further notifications of future events, sign up on MalibuRebuilds.org. Thank you all.
May I? One last thing, if we may.
Go ahead.
Sorry about that. Commissioner Lara is going to be hosting a claims town hall virtually. So you are please welcome to take part of that. It's going to be April 22nd. And so we have the information up in the front. You can sign up for that, and they can, and you hopefully you'll be able to get a lot of your answers there as well. Thank you.
Make a closing comment? I should have asked. Oh, okay, thanks.
My only closing comment is take advantage of the folks that Phil has brought. This is an opportunity to get a direct line into the fair plan, and that can be tricky, and you've got it tonight. So take advantage.
Thanks, Amy. Thanks. We look forward to helping everybody. Thank you.